Okay. Yeah, I just want to comment a little bit about what's gone on over the last couple of weeks, actually. When we met in Dallas, of course, the subprime mess was in full swing. The volatility was really starting to come into the market, but I still felt that the eyes weren't necessarily going to be as riveted on the Fed as they have been. And we had a couple of events that hit the market right before the Bank of England meeting and then right before the Fed meeting. The main report, let me scroll over. I gotta orient myself here. Okay, here it was. The main report that I'm talking about was the housing survey over in England, and it was bad. There's no real sugarcoating of it. The real estate market over in the UK, I think, is poised to start the slide downward. The United States real estate market continues to slide downward. Prices are starting to accelerate to the downside. In fact, personally, we are out of all of our speculative real estate holdings. We've gone to cash 100% when it comes to real estate. Well, at least I have. Others in my family don't necessarily share the same views and are in fact starting to buy a little bit. So I think we're at the beginning stages of a very pronounced repositioning of wealth. I don't, like I've said before, I don't want to come across as a doom and gloom kind of guy, because this is really just a natural part of the equity markets. You have to realize any market that gets well away from value will inevitably come back to value. That's just a given. It's a law of supply and demand, if you will. So my opinion and what I'm telling my family is, we can't start buying real estate until they're begging us to buy real estate. We're still getting the jovial calls, and people who are looking to sell are still commanding fairly high prices, what I consider to be high prices. And it's no different than in the marketplace. When the marketplace starts to panic and you see people starting to puke, figuratively speaking, then you have a real opportunity to buy at a very, very attractive price. And I think we're accelerating to that here in the U.S., and what we're seeing right now spreading is that same cycle is affecting other countries. We saw it in the UK. That's where this little red arrow is. The Rick's housing survey came out very negative, and the pound just kind of collapsed. Very, very fast move to the downside. So fast forward to a few days. You're coming into this area here. You've got the Bank of England meeting. They lowered just like everybody thought they would, but things have changed quite a bit. We didn't get the kind of sneaky thing going on that I was necessarily hoping for. I think it's actually a little bit better. What I was hoping for is that we would be able to get positioned ahead of everybody else. Unfortunately, we didn't get that shot. I really think that what we're going to see in the pound and all the dollar crosses is an increase in volatility. And here's why. Today, you had you had several major G7 countries that came out and said, we're putting liquidity into the system in this sort of solidarity move. And I look at that with suspicion. The only real incentive that a Federal Reserve or Bank of England or central bank anywhere has to put money into the system is if there's enough money. If there's not enough collateral, in other words, to keep these concerns going, then the Fed has to pump more money into it. You can look back to the panic of 1906, where basically the stock market was at a very high level historically, and in essence, in the stock market, the brokers have to settle their books in essence every night. Okay, so every night they've got to have enough money to cover the stocks that they have purchased. And when people are trading on a margin account, then literally the customer doesn't have to put up all the money, the broker doesn't have to put up all the money,